So guys, starting off with a week, alright? Let's dive right into this. Let's lock in. So, starting off straight with Monday, what I'm expecting for Monday is the DXY to continue lower, and I'm referring to the DXY just because then you can translate that to every other single asset you're trading, because it's inverse, right? So if you're trading NASDAQ, I'm expecting overall high prices for NASDAQ Monday and Tuesday. Simple as that. For the DXY, I expect pretty much low prices for the DXY on Monday and Tuesday, and I'll share some sauce to why that is. Actually, I'll shed some light on that. But however, I'll cut that off so people on YouTube can't hear that. So on Wednesday, pretty much what I'm expecting is overall is for us to actually start going higher if we are where I think we're gonna be on the DXY. So I think Wednesday, Thursday, and Friday will overall go higher. Pretty brief week, not so much actually happening, and I think Tuesday will be the low of the week. Wednesday, Thursday, and Friday will just continue up higher. So let's dive right into the week. So, going into this, right, this is precisely what I think we'll do. As y'all know, we're in this market maker sell model I've talked about for a couple of weeks. We're in this market maker sell model, or you guys have already known we're in this market maker sell model on the monthly chart. On the weekly chart, as y'all can see, we're pretty much, this month has been amazingly bearish, right? However, the days left on this month is only 5, and as y'all can see, we have not formed the power 3 upwards yet, right? We have not formed the manipulation upwards yet. That's the reason why I think we'll be bullish on Wednesday, Thursday, and Friday, because we will do this manipulation upwards, finishing off that weekly open, high, low, and close. And I mean that close manipulation, that open, high, this is manipulation. And I think we'll form the low at this rejection block, and then close pretty much here. That explains it, right? That explains it. That should be the only thing pretty much you need to hear. And what I want to shed some light on, alright, is that everything ICT teaches is fractal. You should already know this, alright? And I will share some even, more saucier things. So every single thing he teaches can be added on every single given time frame. Alright? Should be simple to understand, meaning every weekly candle is also power 3, and every daily candle is also power 3. Every 4-hour candle is also power 3, and etc, etc. So you always get that open, high, low, and close. In some instances where you only have a buying or selling program, you guys will need to learn when you have that buying and selling program, and that's when we have low resistance liquidity, meaning no given PD raise in a discount or premium opposing that given order flow. Alright, that's some shed to sauce. Alright, that's some light to sauce. Alright, you could say. So what I'm thinking is that the week will continue smashing down lower. Monday and Tuesday will go lower into this little rejection block. This rejection block is in this is a model. This is the intermarket bank range model, as y'all can see, or program, IPDA program, intermarket bank's IPDA program. You can see this rejection block right here. This rejection block as well have multi-time frame closes. Multi-time frame closes leads to a stronger rejection block. That's some sauce as well. So going down lower, I'm thinking the manipulation will start here. Monday lower, Tuesday lower, then off on Tuesday. I think we'll start the manipulation higher Tuesday, Wednesday, and Thursday, closing somewhere in here. So closing between the 50 and 70% in the opposite direction. Meaning you can use an inverse TGIF model for you guys, which I've not talked about, to figure out where we'll head. Alright, so I think pretty much where we opens up from this high right here to that given low, you could either grade as price swing, or you can TGIF that as price swing in the opposite direction. So I think if you now inverse this, I think we'll go to the 0.2 or 0.3 of this weekly range. So I think we'll do something like this, where we actually head down lower, alright, and then actually go to the 0.2, 0.3, so we're here, close the weekly range right there. All right, or might go to 0.3, and then we close the week like this, so we get the open, high, low, and close as well. But yeah, as you all can see, we have not started that yet. So what I'm thinking we'll go to is this strong little PD array and then upwards from there. Now, where I'm thinking we'll head from there is that I'm actually thinking we'll head up to this weekly inverse value gap or even higher. Alright, I'll not show you specific levels just because that's reserved only for students. Alright, and the students know specifics of why I'm actually thinking we'll head up higher here into this and then continue lower with a bearish institutional order flow. So on a 1 hour time frame, that would look something like this, where we actually, we could even gap up higher, and then we pretty much go down lower, fill that gap, and then high prices. We don't really need to gap down lower because now I only have one scenario, because this is exactly what I'm looking for, right? I don't see any other options for price. We could, of course, take this low and continue more bearish, but I'm still looking for this at the end of the day, and then I'll just not trade. Simple as that, right? However, if we now in a macro where we trade it down into this specific level right here, I will actually enter buys, or not buys, I will enter sells on USD. As you all know, it's inversely correlated, so should be real simple for you guys. So now I'm looking for that specific level. Now on a USD, as you all know, I sent out pretty much a TikTok of my buys, right? So as y'all can see on the weekly chart, I'm still looking for the same thing. We've taken buy side, we've taken sell side, we've formed a rejection block, we've now reached this rejection block, so that's why I'm watching this rejection block. We're in this market maker buy model right here. So specifically what I'm looking for is us trading up to that rejection block right here, forming a swing high, going down to a discount, repricing into a discount. What's the first PD in a discount? Yeah, that's this proportion block, proportion candle. As y'all know, in proportion blocks, proportion candles, you're only looking for the 1 to the 0.5 to get respected, and if we go below 0.5, it will probably fail and will continue lower. And I think the institutional order flow is super strong, so I think we'll respect the 1 and the 0.5. Now, most notably, this is as well also in a breaker. All right, so this is in a breaker with a swing high, with a low and a higher high, with a high, low, higher high, right? Intermediate high, lower, I don't know what this is called, but a low, right, and then a higher high. And I think this will be an sort of new intermediate high, right? So I think we'll go down lower into this break block. 50% mark of this break block aligns perfectly with the 75% mark right here. And I think the 75% mark right here will be specific level right there, will be the low, and then continue upwards if we now trade down lower into this. If. Alright, that's a big if, right? Because the institutional order flow is still bullish. Alright, you should never, ever, alright, just sell random here. Alright, because whenever we can form a high, or we can just continue pushing up higher, which is why I want you guys to be careful with this rejection block as well. Even though we have multi-time frame closes, even though I'm looking for overall this being a swing high, we could as well be seeing this buy side getting taken out and us trading up even higher and could just continue up for the rest of the week. However, I think that's improbable, and I think we'll need to reprice into a discount, and in that discount you will take such a good buys. Alright, I would recommend everyone, alright, that's in the lowest of remorse, right? I would recommend every single one of you guys to focus on buys in discounts right here. Alright, if the market ever come down in here, you need to focus on scaling in. Alright, because in here there will be an only low resistance run upwards. Because what do you guys think the market will do here? Alright, if the market actually reacts with this, I think it will form an original consolidation. So what will this do? This will form overall a market maker buy model in this would is smart market reversal. It could just scale in, and bam, the market will go up higher. Simple as that, alright? Simple as that. Alright? That's precisely what I'm thinking will happen. And as y'all know, you don't really need to know how it will look on an intraday basis. You pretty much would just know my buy. So my bias is pretty much this. Original consolidation, get it formed. All strain down into discount. Discount being here. And then higher prices. Completing this market maker buy model, which will form. And then reaching for ultimately this higher time frame market maker buy model. And of course repricing into this little inefficiency right here of sell side imbalance. Bam. Finished. Alright. yeah, saucy call, right? And simple call. Now I'll take questions and I'll also look at other markets, right? So that's